Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Dennis Dick. Joel abandoning us for a quick trip to Montana, and he missed an uneventful day. Not much happening in the market yesterday. Wasn't a ton of news. Oh, yeah, except Elon Musk kind of lit a fire under Wall Street and kind of took over the news of the day. So we'll talk about Elon and Tesla and what it means for the stock going forward. We have a number of earnings on our radar as well. Kraft Heinz with the secondary offering. So a lot to get to in this hour. Dennis, how's it going this morning?
It's going. It's busy. I mean, Tesla news dominated the headlines there yesterday. We'll talk about it in a bit. We'll give you, our theories on it a little bit here, but there's a lot of other stocks to talk about here and a lot of bigger stocks to talk about. So Disney, a few others, lots going on.
All right. So you want to start with the Tesla, or we can go to Disney?
Yeah, give us the details. You give us the headlines here and I'll break it down how I see it.
All right, Tesla. I don't even know where to start with this. Okay, so I guess this all started around noon Eastern time when Elon, with the tweet that I think could go down in history, where he says he's considering taking Tesla private at $4.20 a share, funding secured. Those are the words he said, funding secured, and of course that started the chain reaction. The stock was halted at around 2:30 or 2 o'clock for about an hour and a half, give or take a few minutes. Resumed at 3:45 and kind of had some crazy action the rest of the session. No official word. The only official word we had was a blog post where they said that shareholder support was there. They just have to vote on it. But is this a possibility? Nothing is really clear to me, honestly. Nothing's clear to anyone, I don't think.
I mean, we don't know exactly what went down, but I'm trying to read between the lines here. And we saw the initial headline, Saudis were making a $2 billion investment at Tesla. I kind of think it went down like this. And this is just my theory, because we can't know anything because we don't know how the conversation went down. But I kind of think, the Saudis making $2 billion investment, obviously we're talking with Musk and, they make that investment, and Musk probably just, takes the conversation, farther, and they're talking, and he probably threw it out there. I've talked about, I've even thought about going private just not to deal with all this stuff. And the Saudis probably said something like, well, we'll back you. We'll help you out on that if you need that. So, Musk gets all excited maybe, and after leaving the meeting decides to tweet out. That's what he is. It's like a little kid in a candy store. Every time he gets an idea, he's got to go to Twitter right away and talk about it all. So he probably got excited about this, because I think he wants to take it private. Why would he not want to take it private? I mean, he doesn't have to deal with all the politics of being a public company, which he doesn't seem to like. So, maybe he just got, word that, that not official word, but basically that the Saudis would back him on this, and boom, he's there. And he's like, okay, I'm going to go tweet this out. I'm all excited about it. So it's not like, I don't think it's intentional manipulation here. And I just, the way Musk is, he tweets before he thinks. So I don't think he was going out there and selling stock. And I know the Seeking Alpha Lobster article that you just posted above, that if we can get the Tesla price above a certain price, that a certain amount of debt convertible will probably be converted and he won't have to come good for that, which is coming due, I believe, in November. I read that at Case 2. And there's people writing cases all over the place. I don't think it went down like that. I don't think he was intentionally trying to drive the price higher. I think it was just he got excited and he tweeted it, and then he realized that I shouldn't have tweeted that with this financing secured because it's not in paper, even though somebody might have said it to him. It's not like, in paper, and I get myself into trouble. Then they halt the stock, and he comes out, and he didn't say anything about financing in the little press release that Tesla had. So I think he just got excited, and he tweeted it. I think he would like to do it. I think the intention is still there. I think if he could do it, if he can do it, I think he would take it private. But I don't think there was intentional manipulation here.
Yeah, I should have started actually with that Saudi headline from earlier in the day, which kind of got this whole ball rolling. But let's just talk about the stock. So it was halted for about an hour and a half yesterday afternoon. Sure. Still traded. I think I saw 30 million shares was the volume yesterday. 420 was the number that he gave in the tweet. So we're halted at around what? We're halted at
367.
367. So we're resuming at 345. Stock pops up to an all-time high. I think it's an all-time high, 387.46.
Very close, 389. So right
close.
Almost to the all-time
right
high.
there.
Which is funny, tangent. But I said yesterday on the show, it's funny that I actually I've turned bullish Tesla. I don't even know how that happened. But anyways, yesterday on the show, we had a question, would you short Tesla here? And if you can rewind the tape, you could hear what I said yesterday. I said, absolutely not. I think the stock's going higher. And I said, I think it's at all-time highs here before year end. It was almost at all-time highs yet that day that I said that.
Yeah.
So I did not obviously see any of that coming, getting up that high. But you just can't fight the tape. I mean, I've said the whole long, fundamentally, I don't get it, but it doesn't matter. It just goes up. And if it's going up this much when the stock's not making money, how much is it going to go up when they did start making money? That's why I've turned bullish on the stock, even despite not liking it from a fundamental perspective. No position in Tesla for me. But I mean, you can't argue with the tape. And I was done fighting the tape. I've tried to be a bear on Tesla before. It hasn't worked. I turned bullish. I even tried to play it long once from 314. I got shaken out. I just didn't hold long enough, but wish I still had it.
So yesterday, kind of threw a wrench into everybody's plans, long and short. I was watching the stock after the tape, and I would have thought it would have gone a little higher than it did, at least to get a little closer up to 420, which is the magic number. But I guess there's a steep discount here, and not to mention all the people, and you tweeted this, Dennis, all the people who had long-term options, long-term call options, which are now essentially worthless.
Yeah, there's a lot of things to consider here. I'm actually surprised it went all the way up to 387. And I don't think you're going to get back up there until we get more information here. If they come out with an official 420 offer, the stock could pop up. But even if they come out with an official 420 offer, where does it go? Maybe 400. There's still going to be concerns, that are they really going to get the financing? Is this all for real? Because it's Tesla, it's Musk. So I'd be surprised, even if they came out with a 420 offer official, if the stock went above 400. So what I see here is really the people buying at 380 or plus. It kind of right now your upside's kind of capped in the thing. And you saw that with the long-term options really going down. People who had the 500, 600, 700 calls, the 700 calls, 600 calls, 500 calls. I saw Jason Raznick. Yeah. I saw Benzinga tweeting it. It's a great point. Those were getting killed yesterday. Typically, when a stock's going up and it's moving in your favor, it's not going to be the case. But I mean, if they're taking off the board at 420, those 500 calls are worthless. Those 600 calls are worthless. Those 700 calls are worthless. So these long-term leaps people were buying, banking on the long-term potential of Tesla, is all of a sudden capped. Mm-hmm. So I think, in my opinion, I like it actually better from the short side up at 380 than I do as a long. No position on it here. But until we get further clarity as to what is exactly happening, maybe we get an official deal announcement. Maybe it does go to 400 or plus if they do actually announce it at 420. But this is kind of tongue-in-cheek. I don't think it's an official deal. It's talking, there's now scenarios here where you're not going to be able to participate as easily. I mean, Musk talked about, having some private, just setting something up where, anybody who's been with him a long time could still participate in the company on the private markets. But people typically don't like that. They want to be able to turn around and sell their stock just like that on the open market with a nickel spread or a dime spread. So I think here you actually, in the short term, the upside is kind of capped, in my opinion. So that's why I think it's more of a short at 380 than it is a long, but no position here, and just my opinion.
Wow. All right.
The people who are short this thing, though, and that's what Rob said saying, people who are short this thing, man, I warned them yesterday. I was like, my words were, when the stock was 342 yesterday, I said, I would be very scared if I was short. I'm not seeing this coming that day. But just the setups and the technicals, it did not want to go down. It was holding on. It was holding on to those gains. When you see a stock pop 40 points and it holds the gains for 3 straight days and does not want to go down despite everybody giving it bad press again, telling you it wants to go higher. And that's what it did. Obviously, it was a news catalyst that took it there, but it did not want to go down. And it would have been up. Like people were saying this 10% move higher was all because of, Musk's tweet. Well, it was a $2 billion Saudi investment yesterday, too, into Tesla. It was going to be up $10 on that. So some of this, was going to be sustained because of that. But, I'm not surprised the stock is trading down a little bit here this morning because people who are really analyzing now, I think, realize, hey, my upside could be potentially capped here a little bit. And the downside is not. I mean, if stuff still doesn't work out for Tesla in the long run and they need to raise capital, they need to get more money in there, the stock could have fall from there. So I think that's why you're seeing the stock show some weakness. I'd be a little nervous now if I was actually long it.
Yeah, if you're short, I'm sorry.
If you're short, if I was short now, I'd probably continue. Just me, I'm not short it, but I maybe would ride it out at this point because you got the 420 on the table, But then we talked about, and I went and looked that up yesterday. The short thesis is a little bit tough too because you got analysts like Guggenheim that think Tesla can make $19 a share in 2020. Could you imagine? Let's take the 420 off the table. Forget it
Okay.
that yesterday happened at all.
All right.
If that Guggenheim analyst is right, and Tesla can make $19 in 2020, what do you think you throw on that? You probably throw, he was saying a 30 multiple. I think you throw at least a 30 multiple on it. He was discounting it back, but take, $20, let's say they made, throw a 30 multiple on it, you get a $600 stock. So, I mean, all of a sudden, the short thesis really falls apart. This company starts to become profitable or make serious amounts of money. And there are some people that really believe that out there, and it might be the case. So I'm completely off the bear camp on Tesla long term. I'm just, waiting for the story to play out a little further, but no position for me. Don't intend to take a position. I might trade it, day trade it, but I'm not putting it in the investment portfolio here. Again, it's still just a valuation issue for me. But I mean, the Bulls have a case. The Bulls have a case.
All right, let's move on. I think the 12 minutes on Tesla is...
Yeah, it was fun. I mean, the media spent 12 hours on it yesterday, so we can spend 12 minutes.
Yeah, right. All right, let's move on to Disney, I guess. They were the biggest report from yesterday. After the bell, Disney reported a Q3 adjusted EPS of $1.87 versus a $1.95 estimate. So a miss there. Sales $15.23 versus $15.34 billion. So another miss on the sales number. As far as the revenue by segment is concerned, media and networks, they made $6.16 billion. The parks made $5.19 billion. Parks and resorts. Studio crushed it. 20% year-over-year increase in revenue, $2.88 billion. In revenue for the studio segment. We know they've been dominating that field, and the consumer interactive segment made $1 billion. All those were essentially light or in line with what was expected of them. So all in all, nothing too...
Not a great quarter, but Disney is loved now. Disney has turned into a loved stock, taking off in the last little while. And I tweeted this yesterday. I'll say it here again on the show. I've said it before. Sometimes sentiment towards the stock matters more than the numbers itself. I think if sentiment, this thing was still in the gutter at 105, it'd probably be down like $98 on those numbers because they weren't great. But you know what? There's shorts that are caught in this thing. It's been going straight up. It's turned around. There's a believers in the Fox thesis. I am long Disney too. So talk my book a little bit. Long-term investment. I've gone to my long-term invest portfolio, bought it down at 102. Just because I thought, Netflix is above Disney. I mean, Disney still has those parks. They still have the best content in the world. I don't care people say Netflix. That's nonsense. Nobody produces better content than Disney. I mean, look at the box office data that you gave, Spencer. Netflix does not have a number one hit in the box office. They don't even put, obviously, anything to the box office, but anything that Netflix has produced, they have some damn good shows. I enjoy some of those Netflix shows. Disney's on another level. And I mean, they got the parks, they got everything from a valuation perspective. It's not that expensive. I still like Disney going forward. I think the market likes it now. I think Disney eventually hits all-time highs here again. Trading down here this morning, but there's buyers below. We saw it last night. Disappointing results. It couldn't sell off. And what happens? They start to buy it back up, and it actually goes green on disappointing numbers. When you see stocks going up on a disappointing report, it's telling you that the sentiment towards the stock is strong enough to overpower the disappointing numbers. I think the path of least resistance for Disney is still higher. Now, we've had a run. So I'm just saying I'd probably be a buyer of pullbacks as opposed to a seller of rallies here. Not adding to my position here, but I'm still holding.
After hours range, the low was 112.85 in Disney. The high was about 117.10, I think, is the high, and we're at 116 right now. So just off that. So the sentiment has turned.
What was the low? What was after hours low? Got down 113, didn't it?
112.85. It did.
Wow. You know what? I bought this thing, and you know what? I was day trading a little bit in the report, and I bought this thing ahead of the conference call in the 113s, and I was listening to the conference call because I thought it might get a lift. I was waiting for the pop, and it just wasn't. I listened for 5-6 minutes, and then Icahn got off, and it still wasn't popping. I was like, you know what? Maybe it's not going to move. I turned around and I sold it for a scratch, and like 10 minutes later, it was back at 116. I was like, no, that's what I thought was going to happen. But I thought it was going to be something that Icahn said. He stopped talking, and I was like, I'm too busy going to trade other stuff. There was lots of things to trade last night. And I ended up scratching a day trade, an overnight trade that I could have made some pretty good money on if it would have held another 10 minutes. It's sometimes the way. So anyways, house of mouse, still liking it.
All right, let's move on to Snapchat. This is
wowzers.
This is not good here. So the EPS 14-cent loss versus 17-cent loss estimate. So they beat by 3 cents on that. That's nice, I guess. Revenue $262 versus $250 million. So a beat there as well. But daily active users global daily active users, 188 million versus a $192 million estimate. Last quarter, that number was 191. So they actually lost 3 million users on a quarter-over-quarter basis. You do not want to see that. Average revenue per user, $140 versus $130 estimate. So all the rest of the numbers are fine, but they're losing users.
I will tell you, and this is obviously just, I'll tell you, just looking at this thing, if you have options, if you have calls or puts, and you're coming in here this morning, those calls or puts look to be going to be worthless because the thing is down 7 cents. So you're going to lose most of the premium that you put into it. But again, here's my rant. And I've got to tell you, you got to trade. If you're a buyer of options, you're a buyer of straddles, you got to trade the stock after hours against it. If you're not doing that, you're missing out on so much profit opportunity. Because let's set up a hypothetical situation. I don't know if you have the call premium. I'll just guess what it was, though. Let's say, you bought the 13 puts and you bought them for I don't know what they were going for. Maybe 50 cents, maybe 40 cents. Let's say they were going for 50 cents. Hypothetical. I don't know what they were going for. I don't have the option platform open. If you want to look that up in the background, you can. Let's say if anybody has that number, they can give it to you. Let's say hypothetically, you bought the puts for 50 cents. Right now, you're looking at a worthless put. But if you would have been after hours buying the stock against your puts, it went down to $11.52. So you could, not saying you could buy the low, but you could have easily bought it at $12 if you had your order out there. So you could have been the 13 puts, you could have bought the stock at 12 on the initial fall because it initially really spiked down. Show that pre-market chart, Spencer, for all this action. Show how wild it was. The range last night in Snap, 11.52 to 14.90. It had a 3.5 point range for the stock. It's only down 9 cents right now. Those options had value like crazy last night if you were trading the stock against them. So you could have bought the stock at 12 against your 13 puts, locked in $1. So now, even if it continues to fall, I've locked in my $1. But if it doesn't, if it doesn't continue to fall, if it reverses, I could turn around and sell it. So let's say, okay, well, I just bought it at 12. I'm going to throw out a 14 offer, right after I buy it at 12 on my stock last night. This is the case it goes for a wild gyration. Well, it takes off and goes to 14.90. So you could have got filled in 14. They made $2 on just the stock, just because you had those options. Then you could have said, well, I'm going to short it now, or it comes back in. I guess, maybe you wouldn't do that with the puts. But if you had the puts and the calls, you could have been playing that way. When it came back down and got below 13 again, you could have played it, got down to 12.40 again. You could have did it again, bought 12.50. It goes all the way back up, and you sell it at 13. So you could have banked $2.50 off that 50-cent option. But if you're not doing that, you look at this morning, your option's basically worthless. So trading the stock against the options is the way the market makers do it. It's the way that I always did it when I was an options trader. So much more money to be made by doing that. Guys, if you can do it, if you can afford to do it, I think it's great money to be made playing these right after these earnings reports if you've got the options.
Just real quick, we do have a tariff headline out that Chinese say they're going to be implementing tariffs on 333 products, including crude oil, coal, diesel, cars, bikes, and steel.
Trade war continues.
Yep.
Market not even selling off on that. When did that headline break? Just now?
Like a minute ago, yeah.
Yeah, so it's not even moving the markets here. So you can see how concerned they are about the trade war. This market just wants to go to all-time highs. I guess you can't stop it now. We got close yesterday, didn't we? Did we hit all-time highs?
Oh,
not quite.
We were close.
So close. On the SPY, 286.62, 286.01 yesterday. So we're right there. The market can't go down on bad news. I mean, if the market was spooked right now, it'd be down 100 points on that. Not 100 S&P points, but 100 Dow points.
Right.
And we're not even moving. So the trade war is doesn't spook the market either. This honey badger market is back here again. It's back.
All right, back to Snapchat for a second. They had a bad day yesterday. So first, I saw a headline that their source code had been leaked to GitHub. That was earlier in the day, but you never want to see your source code leaked online. Also, Saudi Prince Al-Weed said he had bought a 2.3% stake in Snapchat, but he had said that previously in November. So if you're,
so this was disclosed already. They knew that.
If you're leaning on that as your catalyst this morning, that was known information. But that's enough of the Snap. Someone in the chat asked about Facebook. Let's just go over that chart while we're in social media land. What does Facebook do for you right now?
I'm long it in my long-term portfolio. I bought it just threw it in a long-term portfolio to not look at it again at 175. So I'm up a little bit in it, but it's come back. I think there's buyers below. I mean, the stuff seems to bounce back here. Evaluation isn't crazy here. I know the thesis isn't as good as it once was, but the stock also fell 50 points on it. So I bought it for the buy the dip mentality that this market seems to have. Threw it in the long-term investment portfolio. Only took a half position on it, so I'm never convicted when I only take a half position. But I mean, we popped up. You're seeing Facebook lift a little bit here in the pre-market. Maybe it's because Snap's numbers weren't as great, and they got Instagram competing with it. I don't know why, but Facebook has been catching a little bit of bid the entire after hours. But I think there's buyers below. I think there's underneath demand here. I think you get anywhere near 180, you'll bounce again. So I'm more bullish than bearish right now, at least on Facebook.
All right. Yesterday was like the busiest earnings day of the week. So if there's a particular company you'd like us to look at, let us know and we'll do it, because I don't think we'll be able to get to all of them. So
let's move away from earnings just for a second. Okay. There's a few other things I want to talk about. Let's go to Kraft Heinz.
Okay.
So, and this is something I disclosed on the show. I sold my Kraft Heinz. So I bought it and it popped So I bought this thing at like 50 or $59 or something. I don't know, like 5 days ago. And then I had the earnings report and it popped to $64.99. I'm like, I just made 10%. Or, looking at it, I didn't make that much because I got out a little bit too soon. But I mean, just hypothetically, the stock went up 10% in a day. I mean, this is Kraft Heinz. This is a food stock. This is a stock that's been hated by the market for a long period of time. And it goes up 10% on that earnings report. That move was absolutely ridiculous. So I was saying I'd be ringing the register. I did ring the register, and I rang it too early because I didn't get the $64.99 high. But I'm out. And you know what? Now it comes down the last couple of days. Now they do a secondary offering. It's a $59.90. I'm going to start rebuying it here probably because I sold it up there. Now I'm looking to rebuy it. I mean, it was just too much too fast. And when the food stocks and the stock market gods give you a gift like that, sometimes it's good to take it. And when I see a 10% pop in a food stock, I think it's unsustainable and it's going to come back in. And that's exactly what it did 3 days later. Here we are, $59.90. Secondary is priced $59.85 to $60.15. Often those secondary pricings can kind of give you a floor. Sometimes it works, sometimes it doesn't. It seems to be trying to find a floor here at the lower end of that range this morning. So I might nibble back in on this one here today.
All right, I actually myself bought Kraft Heinz a little. I think before you guys did, but I'm not.
You didn't sell in that pop though, did you?
No, I didn't.
You're long term. You've never sold a stock though, have you?
I mean,
have you ever sold a stock? You only buy.
No, that's not true. That is not true. Years ago.
You're like Warren Buffett. I buy and hold, and that's it.
It's not a loss.
Mini Warren Buffett.
It's not a loss if you never sell. All right, let's head.
What is in the Spencer Israel portfolio? We know you got GE. Now ETFs. We find out you got Kraft Heinz. What else is in the Spencer Israel portfolio?
It's mostly ETFs, man. I don't like buying stocks.
You know what? And if you're not, and obviously, I think that's somewhat a lot of my investment portfolio is ETFs as well. And you know why? Because I never really shake out of the ETFs because they don't do these crazy moves. Exactly. You're buying the overall market. So I actually usually buy some ETFs monthly. My wife's got it in the calendar even. It always just says, to buy some ETFs. So at the end of every month, I look and I usually buy a little bit more with money that I've made, and I throw it in my long-term investment portfolio. I buy a little bit more ETFs. I own the Qs, I own the SPY, I own a lot of Canadian ETFs because I'm Canadian. Mm-hmm. So like the XIUs in Canada, if you trade over there, huge position in those. I buy the energy ones. I've got a ton of ETFs. I probably would say half my portfolio is ETFs. The other half is stock picking because I like to do stock picking.
Yeah.
But I think the ETFs is like something I know I'm not going to trade out of. I don't know if I've ever sold an ETF. So in my long-term investment portfolio, I think I've only bought them. So it allows me to hold in. So when I say something like Kraft Heinz, I'm going to hold on to this, and it pops 10% a day. What do? I take the gain. So you don't see that happen in the ETF, so it doesn't tempt you to do that. So that's why, as a trader, I'm always fighting my natural trading tendencies, and by buying ETFs, it helps me to fight that.
All right, let's head back to the earnings parade. Someone on YouTube mentioning Match Group because they had earnings yesterday after the bell. And they were good. Q2 EPS 41 cents versus a 35-cent estimate. Sales 421 versus $412.8 million. So beats on the top and the bottom line for MTCH.
Just an opinion. This is not, and we don't give recommendations on the show, but if I was in this, I'd be selling it. You know why? Because it got killed on the potential of Facebook's product going to compete with them. This is a good earnings report. It's popping up on that, but we still don't know what Facebook is doing over there. I think competition is coming for them. I think today's rally, 15% rally, is a gift. And I think when I look at this thing 2 months from now, I think it's back below 40 and maybe, even below 35. So I'm a seller of the match. I'm not a fan. That's just my opinion. But I'm almost tempted to short it.
I was looking at their peer XOXO. Nothing happening this morning in that though, really. So just
Facebook has announced that they're working on some type of dating service, right? Can you just imagine what does that do to Match? I mean, Facebook has all the people on it. If there's an internal dating service on that, what the hell do you need Match? I mean, which one is Match? Is that
it's not a zero-sum game?
Which one do they own though? There's a million of these dating sites out there. Is it the Plenty of Fish one? Which one do they have?
They own Tinder.
They own Tinder.
Yeah.
Which one's Tinder? Is that the one that
was like the first one?
People look for hookups.
Well, they're all the same, but that was like the first one. Oh, they also own Plenty of Fish. They own Match.com.
Okay, so they got a bunch of them.
Yeah.
I just think competition is coming for them. So, and if it comes in the form of Facebook, that is the worst type of competition. I don't want to own the stock for that reason. So I don't want to compete with Facebook. Whenever somebody like Amazon or Apple or Facebook's coming into your space, I think it's a good reason to ring the register or maybe move on, especially if you're sitting up in this thing. And there's not a lot of people who are down in Match here because we're $3 away from all-time highs, $4 away from all-time highs. So I think it's a really good gift here. It sold off originally very hard on the news that Facebook was working on a dating service. And if that does come to fruition, I think it's not good news for Match Group. I'm a seller.
All right. People keep wanting us to talk about Triple D, so that's what we're going to do. 3D, yeah, that's why. 3D Systems reporting yesterday, Q2 just EPS 6 cents versus a 1 cent estimate. Sales of 176.6 versus 165.9 million dollars. So nice beats on the EPS and the sales for DDD.
So I'm torn on this one. This is a stock. Some stocks just have your number. Like it's a stock that you trade, you get chopped up. DDD has my number. I've tried to swing trade this a few times. Day trading is a different story. I'm pretty good with the day trading stuff. I'm pretty good at feeling out flow. But I've tried to swing trade this baby a few times, and I keep getting stopped out. And maybe it's just because it's a little bit wild, does some things, comes back in. But at one point in time, I bought this thing at 15. It ran to 22. I sold half. I should have sold it all, but it ran so fast, I sold half. And then it came all the way back down to $9-10, and I ended up eventually selling the rest of it for a tax loss at the end, like a little bit of a loss. All in all, I ended up maybe scratching that initial trade. And I tried to rebuy it at like $10, and it wiggled me out. I didn't make anything. And I tried to rebuy like 13, and then I sold it at 12. It's got chopped up in it. And you know what? It's got my number. So I'm going to reserve any of my decision making here because it's just got my number. So it's got a nice pop. I see resistance up at 16. That's all. I mean, this thing's popping 16%. It's a big pop. That's all I'm going to say about it.
All right. Moving on. Let's go to Papa John's, since they were in the news recently and they had earnings yesterday after the bell, and they were not good at all. PZZA reporting Q2 EPS 49 cents versus a 54-cent estimate. Sales 407.9 versus a $425.5 million estimate. They also cut their guidance for the fiscal year. They lowered their North American sales guidance for the year from flat to down 3%. That was the original range, to down 7 to 10%. They lowered their EPS from $2.40 on the low end of the range to $1.30. So just not
absolute good mess. They're closing stores too. I saw. What are they saying? They're gonna close like 100 stores.
Oh, that's right. Yeah.
I never want to own companies closing stores. That's telling me. And then there was finance. They're talking to bankers because they're worried about financing problems here. This story looks completely broken here now. No interest in this whatsoever. Can it bounce? Sure, anything can bounce, but I think the story is broken here. I think Papa John's has serious problems, and the stock is showing you that. I don't want any part of this. I'd be a seller of rallies. Just my opinion.
I haven't looked at the peers at all. Any sympathy moves this morning? And is Papa John's paying Domino's?
Well, you think Domino's is sympathy, but Domino's is doing everything right.
Yeah,
so this is its own problem. Yeah. So Domino's Pizza's down 20 cents. I don't see all of a sudden Domino's Pizza getting whacked here because Papa John's is getting annihilated. I mean, Papa John's has serious problems. It started a long time even before the CEO, but now the brand has been tarnished because of the CEO. And not only that, now they got other problems. Now they got, sounds like, debt issues, and they're trying to figure out the financing. Sounds like a whole lot of problems here. So I think if you're coming in here saying the stock is too cheap, maybe they figure these problems out, but I don't like to take those chances because they may not figure these problems out. I think the pizza's fine. I've ate at Papa John's. I enjoy the pizza, but right now this stock has major problems and I don't want any part of it.
It's fine. It's the kind of pizza you eat it if it's in front of you, but you never go out of your way to get it. That's kind of how
But that's an issue. I mean, that's a major issue. So
that's how I look at it.
You like Domino's better than Papa John's?
Yeah.
I like the Domino's story. I wish I would have bought the stock years ago here because I've always said I like Domino's the best. I've said that for years. And you know what? I should have just went and bought the stock years ago when I was saying that because best pizza is the best price. And I mean, Domino's pizza has been unbelievable. $32 in 2012. It's 277. There's been no stock. It's been really almost no stock that has been better than Domino's pizza. Unbelievable.
Well,
Papa John's exact opposite.
The lesson here is if you make an ad campaign saying how bad your product is and how you hate it, and you're the CEO, then the stock Wall Street will reward you because that's what they did. The CEO came out and said their pizza was terrible and we're going to fix it. And I guess that's what happened. So anyway, CVS reporting this morning, Q2 adjusted EPS $1.69 versus $1.61. Sales 46.7 versus $46.34 billion. So nice Q2 numbers there for CVS. The Q3 EPS guidance coming in line. And they say the Aetna transaction is expected to close during this current quarter or early next quarter, early Q4. Also raising their guidance for the fiscal year. The EPS guidance was raised by 11 cents on the low end of the range from 687 to 698.
Aetna, CVS, this is all the major headline here too. Aetna's trading up $4. That doesn't look like they're going to get the scrutiny. They were saying that the Time Warner, AT&T deal, or that some of the other deals did. So it looks like they might dodge some bullets here and get this merger through. And that's good news for Aetna shareholders. It's trading up $4 on this. CVS here trading up as well. Obviously, their own earnings report. I don't know, long term, its stock's just been in a trading range. So it seems like it gets the lower 60s, it finds buyers, gets to the upper 60s, it finds sellers. You can go out and you can look at the weeklies to see what I'm talking about. But we've been range bound here for pretty much the entire year of 2018. So I think I'm more of a leaning on the seller side as we get in the upper 60s, more of a buyer maybe in the lower 60s. I'll trade the range until it doesn't work anymore.
All right. Any particular earnings that you want to take? Because I got about 15 more on my list, but I can go in any order. So unless you want me to just run down the list here, which I can do.
Yeah, you can run down. I mean, the only one I want to make sure is on the list is, there was a couple actually. Go your list.
All right, someone's mentioning Coors. They're on my list. So Michael Coors reporting this morning Q1 EPS $1.32 versus 94 cents. Sales blew it away. 1.2 versus 1.14 billion dollars. So beats on the top and the bottom from Michael Kors. Did they give guidance? Yes,
they did.
They raised their fiscal year, their full year adjusted EPS outlook from $4.65 to $4.90 on the low end of the range. The sales outlook for the fiscal year was also good.
The guidance was okay. The numbers were great. The stock had a huge pop. I actually played this a little bit here. I got chopped up a little bit and it really didn't make any money. I was actually looking at it and then I was playing it from the long side. Then I was going to play from the short side. I didn't. I should have. Anyways, I got chopped up. I think I ended up losing 30 or 40 cents just on the trade. Actually, I might have lost a little bit more than that, but it wasn't on huge size, so it wasn't a big deal for me. But I got chopped up a bit. Often when I'm playing these earnings and I'm not convicted, again, I play them with smaller size. So in case I'm wrong, and the stock got up to almost $70. So it really popped initially. It got up to like $69.80. It has leaked significantly here, giving back a lot of the gains here. It's starting to form a lot of offers in the 67s. Lots of things can happen. Stocks can reverse once, it starts. But as of right now, there's pressure on the stocks to continue to give back some of these gains. So I'd be cautious if I was long it. Just because I'm just looking at the book pressure here and offers forming, bids not forming, which makes me think it could potentially give some more of it back. I'm not sure why. Funny things happen. We saw, stocks, beat on the top of the bottom, raise guidance, go down. It's a funny market. It's finicky here right now, but just the way the offers keep forming here in KORS makes me think it could come lower.
All right, let's go to a stock that's doing well this morning. CyberArk, CYBR. They reported earnings after the bell yesterday. Yes, they did. Q3 adjusted EPS I'm sorry. Yes, Q3 adjusted EPS 36 cents versus a 24-cent estimate. Sales 77.7 versus $72.9 billion. So beats on both the Q2 numbers. The Q3 EPS guidance was a little bit light. The sales guidance for Q3 was in line. The fiscal year EPS guidance was in line. The fiscal year sales guidance was higher.
It's a nice pop. Wall of resistance at 70. What's the after hours high?
I think we're there, 60, 68, 60. Let me check my other platform here. But
yeah, okay. So I'm going to say, I don't know what's happening at 70, but if you look in July, you had 1, 2, 3, 4 highs right in the same area.
68.90 is the
cautious up at 70 because that's where the resistance was before. I mean, we're getting a running start. Could we blow through it? We could. But what's had resistance before can have resistance there again. Could be a big seller at the point. That's what it looks like to me when I see 4 highs so close in the same area. It's telling me there's a big fish there. Could take that big fish out and then go higher. But it looks to me like 70 is a major resistance level there. So a little bit cautious if you're buying up at 68, 78, just because you got the wall of resistance up at 70.
All right. Another big, probably, I think this actually is the biggest move of the morning. AAOI, Applied Optoelectronics. They reported yesterday after the bell. Q2 EPS 64 cents versus a 45-cent estimate. Sales 87.8 versus $77.8 million. So huge beats for the Q2 numbers. The Q3 sales guidance mostly in line. The Q3 EPS guidance was in line as well.
Is this a Kolb stock? Is this one of some Kolb stocks?
Could be.
It is.
You know what it is, and I know that he was in it yesterday.
Kolb's having a pretty good day because I know he's in that INSG too. He makes some calls on the show sometimes too, and I follow him a little bit. You can follow him on Twitter. I think Spartan Trader.
Yeah,
but
Spartan
anyways,
Trader.
What is his handle? He's a Benzinga guy.
I wouldn't recommend following him.
Matt Cole, he got some pretty good calls, man.
Sometimes.
He's a good guy. Great guy.
Yeah.
You know what? He does pretty good in the markets too there. So he makes some good calls sometimes. I think he's having a good day. AAOI, INSG, I think these are both Kolb stocks. So anyways, getting a big pop. He's the guy to talk to on this. It's up $9. I would just tell you, you had resistance up at 50 before. That's a ways away from here. That's where the serious resistance comes in.
All right. HDP, did they have earnings? Hortonworks,
it's up big too.
Yeah, they did.
A company I don't follow closely, but this is a big pop.
HDP Q2 EPS a 12-cent loss versus a 23-cent loss estimate. Sales of 86 million versus $80 million. Q3 sales guidance higher than the estimate 87 versus 82 million. Fiscal year sales guidance also higher by 10 to 20 million dollars.
Going from the lower end of the range to the upper end of the range in one trading session. 1701, we're sitting right on all the support we've had from May, June, July. We're going to go right up into the resistance at 20. That's the resistance level again. So this is at the upper end of the range here, which makes me cautious on the buy side, more leaning on the short side there. Again, earnings can blow things through. So you got to watch, that you don't get continued momentum. So always have a contingency plan. Even if you look at this and say, well, it's not going through 20, it didn't before. If it does, have a contingency plan and know where your out is. Have a stop, figure it out. Maybe you use a 2045 high from June the 20th. But I'd lean more on the short side than the long side here, but it's got some momentum. So you got to play cautiously if you're playing it from the short side.
Lumentum Holdings reporting this morning the Q4 EPS 95 cents versus a 65-cent estimate. Sales 301 versus $287 million. So nice beats for the Q4 numbers. The Q1 EPS guidance is in line. The Q1 sales guidance is higher than the estimate by, again, $10 to $20 million.
Apple supplier, right?
Yep.
Yeah, I mean, Apple had a great quarter, so not surprising that LITE has a great quarter. It ran up into the report. It's getting a nice lift here. You got some room to 64.5, I would say. Up there, it gets a little more dicey, so there's a little bit of room up, a little bit higher. I don't see much at 62, 62.5, but I do see some resistance forming up at 65. Did we get let's go to some of these Chinese stocks. Did we get that WB,
Weibo? We're supposed to. I'm not sure.
It's up $4. It must have came out.
Yeah, you know what? They're out, but I don't have it in my. If I go to my PR newsfeed, I'm sure they're there, but I don't have them in front of me. Let's see if I can track them down real fast. Here I'm in the release now. Where are we at? Revenue for the quarter, $426 million, a 68% increase on a year-over-year basis. Do I have an EPS number for you? Now looking. I mean, we know there are good numbers.
It's
Because the stock
amazing
is
how
up.
much. And this China? Is it
Yes.
Weibo's China? Is it
Yep.
not?
Yep.
It's amazing how these China stocks, Chinese, some of the, we're making or very close to making new all-time highs. A lot of stocks come back. A lot of these
All
Chinese
right.
stocks are really struggling.
68 cents was the non-GAAP EPS.
Yeah.
For 38 cents was the number a year ago. So on a year-over-year basis, they were showing some nice growth there.
A lot of these Chinese stocks struggling as of late. We know Baidu's in the doghouse because Google's coming into there and competing with them. Again, that's another reason why I don't like to compete with the big fish. When you start seeing rumors, even if you think, like I know Spencer was saying earlier with the my Facebook match comments, who wants to, date on Facebook with the privacy issues. But, I just don't like competition from the big boys because they figure it out. So that's why, when you see that headline, which broke, about a week and a half ago, that Google, or a week ago, that Google's coming into Baidu's space, people get nervous about that stuff. And sometimes it can be sustained selling for a while. And obviously BIDU is still going down here because of that. It's in the doghouse, but Baba's in the doghouse, really hasn't bounced back with the overall market. All those little Chinese plays that we were playing, from the long side before have all been in the doghouse for a while. HUIA just can't catch a bid. IQ had a pretty good report. Didn't matter. They sold it right back off again. Sogo is another one. It's been hanging out the lows so long, it makes me think it might go lower too. So a lot of these little Chinese stocks are really not in favor right now. So that being said, do I think WB is going to rally $10 a day? Nope. I think you're going to run into resistance at 90, and I think there's sellers, there's overhead supply here because there's a lot of people who are underwater and a lot of these issues.
Specifically, the Chinese internet names. I've got KWeb up on the screen. This is an ETF that I happen to that I happen to be in.
Doghouse.
Chinese internet, and they're all in the doghouse right now. So
and that will turn eventually, and those things will be plays again. But if you're trying to buy these things right now, you're trying to call a bottom. I've never made a lot of money trying to call bottoms. The easier money is made when the wind is in your sails and they start to get a lift. So when they're going straight down, you're trying to say, okay, well, I can't go any lower than this. I've been punished that way before. And sometimes you get some of your good trades. And as an investor, I do try to call bottom sometimes. And as an investor, I'll sometimes throw it in just on a valuation perspective. But as a trader, I never try to fight the tape. If the stock's weak, if the stock's in a downtrend, I'm usually a seller of rallies. If the stock's in an uptrend, I'm usually a buyer of dips. It's kind of how I've stayed in business for 19 years as a trader. I stick with that. Momentum is, at least right now in the last few years, momentum traders have really done a lot better than contrarian traders.
Mylan Pharmaceuticals. This is an interesting headline. So they have earnings this morning, $1.07 versus $1.22 estimate. Sales 2.8 versus 2.96 billion dollars. The fiscal year sales guidance is light. The fiscal year EPS guidance is light, and they are exploring a range of strategic alternatives to unlock the true value of our one-of-a-kind platform.
What's pre-market low?
Let me get that number.
Bring up the chart. Just bring up the chart.
Yeah.
We can see it.
Pre-market low, I'm seeing 35.20.
Wow, for real? Went all the way down 35.20? Man, that's a gift down there. So that's where you have all kinds. That's what I was going to say. $35, you got major support down there. I think that holds. Should have had my bids out there after or pre-market here, obviously, because they would have been filled here on MYL going all the way down to 35.20. I'm not sure how much stock traded down there, but that was a gift. Anything in the lower 35s, I think, I like it from the long side there. Also, pharmaceuticals and biotech has been fairly hot. So you're buying a sector that has turned a little bit. I mean, this generics a little bit different story, but Teva I think was weak on their report initially too, if I remember correctly, and they bounced back. So I don't know. I like it down to 35s. I don't know if you get another chance though.
Pre-market high 39.16, and we are right smack in the middle. So
no trade here for me. That's a little bit too high for me to chase it, but I like it down. Even you get to 36 might be, but I love it down to 35s.
All right. Someone in the chat had mentioned Weight Watchers. We talked about them on Monday. They had earnings Monday after the bell. So we talked about them yesterday. They're asking, any hope here?
It's broken now. So I think you got to be a seller of rallies on this thing now. I mean, it got up over 100. This story, this was an amazing story. I mean, if you weren't booking gains here, stock was down to $5-6 when Oprah came into it. Never fight Oprah. One of the best spy signals is when Oprah supports a stock. And we saw this back in 2015 when she got involved and the thing took off. It did pull back in 2016 before finally in 2017, just blasting off into orbit and going from $10 to $60 and then continuing the run this year up to 100. it got overdone. I mean, way, way, way overdone, in my opinion. And I think it needs to come back in, and I think that's what you're seeing now. And I think rallies are to be sold now. After yesterday, that chart looks broken to me.
Back to the earnings parade. Let's go to Shutterfly. SFLY reporting yesterday after the bell. Q2 EPS of an 80-cent loss. I'm not sure if that compares at all to the 33-cent loss expectation. Sales for the quarter, 476.7 versus $447 million. Wow. So a nice beat on the sales number. The fiscal year sales guidance coming in line. The fiscal year EPS guidance coming in higher by 10 cents, $3.06 versus a $2.96 estimate.
What happened on August 1st?
Let's go.
That was your big reversal day there, where the stock opened at 82, whooshed down to 76, and then got all the way back up to 81. Wow. So that was like the reversal day of reversal. That's what you look for, is like that reversal day where the stock is weak as hell, flushes everyone out, and then gets back up and closes strong. That was the tell. And then obviously earnings are taking us higher here now. And it's a big pop now. Hard to chase it there now. But what was on August 1st? Must have been some headline or something.
I don't know what it was August 1st. There's nothing in the pro about it. There's no PRs.
Maybe that was just a bad day for techs overall. I'm trying to just look if there was other stocks that were beat up that day. I mean, that was the day August 1st. Also, well, I'm just looking here. Yeah, no, I don't know. Anyways, I don't know what happened August 1st, but that was a reversal right there. So now you get the big lift up. I mean, if you were long it, now it's time to book the gains, I think. But it's kind of in the middle of nowhere to initiate a trade here, though. You got overhead supply coming in a little bit in the 92, 94, 95 area. So I can't really get on the train to get long it here, but it's so hot, up 7%. I don't know if I'm shorting it either. So no trade for me, no opinion here, but what a reversal day was back on August 1st. That was the tell.
All right, let's go to Lending Club, I guess. I'm just kind of running through my list in no particular order here. So Lending Club had earnings after the bell.
They're still stock?
Yeah.
What is Lending Tree versus Lending Club? Why is Lending Tree, TREE, such a better company? Like, what did they do so much better than Lending Club? Isn't it the same business model, or is it different? I look at that Lending Club, it's been annihilated. And then you look at Lending Tree, which is TREE, and it's been annihilated as of late. But I mean, it's done a hell of a lot better than Lending Club. I don't know what the difference
Lending
is.
Lending Club is like a fintech startup. They've only been around for a few years. Lending Tree is a little bit more seasoned as a company. Yeah. I don't know how their business models differ.
That's what I'm wondering. So anyways, whatever Lending Tree has done, they've done a lot better than Lending Club, because the Lending Club has been in the doghouse. So no trades here as of late to report, or as of this morning to report here. It was trading down slightly last night, $4 on the report, but really muted activity here. So not much to say about this one.
Okay.
Let's go Jazz. Zebra, because the stock was down $10 last night, lifting a little bit here this morning, but one of your big pharma here. We saw this the last couple of days. Some of these farmers getting killed. Yesterday was Spark Therapeutics, annihilated on their report. Today it's Jazz. That's taking a pretty good hit, although it's trying to find support where it found support back in June and July, back at 170. How are the numbers there?
They were good. The Q2 EPS was $3.49 versus a $3.23 estimate. Sales $500.4 million versus $469.6. So beats on both the Q2 numbers. They raised their sales guidance for their one drug, Xyrem, significantly. The fiscal year EPS guidance was in line. The fiscal year sales guidance was in line. This morning we have how many analysts? We have 2 analysts maintaining their buy ratings and raising their price targets this morning.
Actively traded below 170 last night. I think it could test 170 here again. I know it's 173.5, but 173. I think it could test 170 here again. That's the level it needs to hold. Absolutely needs to hold 170. Again, there seems to be some buyers below on some of these pharma stocks. I took a flyer yesterday, half position, bought Bluebird Bio. Whoa. And I know it's unlike me. It's why it's only a half position, because, it's definitely not a valuation play, because they don't make money. But Regeneron, you put their vote of confidence in it. It's one that's been on my radar for a while. Of the big 3, we obviously saw Juno get bought out before, of the, the stocks that used to trade together. It was Bluebird, Juno, and who's the other one? No, I'm not remembering. Celgene just bought them, wasn't it? Or Celgene bought Juno. Who was the other one? It was Juno. It was Juno, Bluebird, help me out, chat. And what was the other one that I used to trade? Isn't that funny? Gilead bought them. Who'd Gilead buy? Kite Pharma.
Yeah.
Thanks, Rob. Thanks,
I want to say that I did not look at the chat.
Kite.
When I said that.
It was always these three stocks traded: Kite, Juno, and Bluebird. Bluebird's the only one that hasn't been bought. They've got some great, they've got some great stuff they're doing, in the pipe. They aren't making money here yet, but they got lots of money for a lot of years here. I think eventually somebody could scoop them up still. It's been on my radar to buy them for a while. They've pulled back significantly here. It's not something I'm going to get married to. It's not like something I'm putting in my investment portfolio and not looking at it, but I like the candle. I like, that some of the biotechs have turned around. And I'm probably going to stop up below 146, but just put it on for a swing trade just for fun. Half position. It means I'm not convicted. It means I'm also scared that a random headline comes out and annihilates me. So on these smaller biotech stocks, I often take half positions because they're scary. Half my normal size.
All right. Moving on to, want to go to Car Avis. This is not good. Q2 EPS 57 cents, in line with the estimate. Sales $2.3 billion, a little bit below the 2.35 estimate. They did add $250 million to their buyback plan, but they cut their sales guidance for the fiscal year and they raised their EPS guidance. The sales guidance was cut. Not significantly. Only they're still in the 9 to 9.3 billion dollar range, which is kind of where they were before. The EPS guidance raise was by 10 cents though. So
I can't understand why these stocks continue to hold on. Hertz has been hurt, obviously, significantly. It came back on their recent earnings report, but really when you look at where Hertz is now, it's down significantly from where it was just when they did the reorg, and it was $50, 19. Car has kind of got a pass here. I mean, we're still off the highs from where 2015, we're $68 down to 38, but is not Uber and Lyft and all of these other companies just eating their lunch? Mm-hmm. I mean, do I really want to invest in a rental car company right now? I mean, long term, trade anything. And, you've got some support down at 35. You think there's going to be a bounce. But, is this a company you want to have in your long-term investment portfolio when there's so many easier ways to do it now with Uber and Lyft? I just don't see people renting cars like they used to.
I rented a car at the end of last year for New Year's, and it actually was convenient.
In certain cases, I guess you're going on a road trip or you're doing something. There's still a case for that, but taxi cabs, car rentals and stuff, it's tougher gig than it was 10 years ago. We'll say that. What about, the taxi cab companies? They got to be hurting, eh? You think, I heard in the medallions to have a cab, and operate a cab in New York, you had to have the medallion, right?
Yep.
Those were going for crazy. I heard they're down 70%. They were going, and I guess Uber and Lyft are attacking the taxi cab companies probably a little bit more than the car rental companies, but I gotta think they're eating their lunch there too. So I don't know. Not a fan of the rental car companies. Not long term.
Are you a fan of Twinkies?
Not today, apparently, because they're getting hit here pretty hard here too. I do like Twinkies, but stock down. Remember that rumor? Wasn't it a couple years ago that they were gonna get rid of Twinkies?
That was that rumor.
It was a bad joke.
That rumor lasted exactly one day, but
everybody's scrambling to the stores to buy their Twinkies because they're gonna get rid of them. Anyways, TWNK, great ticker symbol for Hostess Brands. Let's talk it.
14 cents versus 16-cent estimate. Sales 215.8 versus $221 million. So a miss on the Q2 numbers. The EPS guidance was cut for the fiscal year from 65 cents on the low end to 52 cents. And there we go.
I don't know what to say here either. Stock annihilated here in the pre-market. I don't follow it closely enough to know from a valuation perspective, and it hasn't been out there that long. 2016. Brutal. We're getting to an area where $11. We found some support in October 2017, and then if you go back there, we had the IPO, which is, when it spun off, was 950, 960, 970. So, you got some support below. Might jumping in here and buying it right away. It seems like these things just don't bounce back right away. But you do have support at 11. So I can't argue with you. If you're thinking about bounce at 11, it might.
Where were we in the chat? Somebody was asking about Biomarin and a reversal. I haven't seen the chart yet this morning, but let's talk BMRN.
Big pop here. Again, biotech has come back into favor, not as much as the mega health. We talked about that yesterday. I mean, the big health like Pfizer's and Merck's and Lilly's are just hot as hell right now. Some of the biotechs haven't, taken off as quickly, but BioMarin can't argue with this one either. I mean, we're on the comeback trail here too. You go to the monthlies, we're not, quite back to where we were in 2015 when the biotech bubble burst, which was back in July when it was $151, but we're back above 100 here now. So I'd say I'm a buyer at dips. As long as I stay above 100 on pullbacks here, if you get a pullback here, I'm probably a buyer.
All right.
Still like the drugs.
I went through most of the stocks on my list.
Don't do drugs, kids. Sorry.
just do drug stocks. Was there 4 minutes left in the show? Were there any other stocks you wanted to hit, or you want to go over some imbalances? We didn't even get to ratings today, but
and there wasn't much in ratings land. Let's go to the imbalances here. Okay. Bank of America 134,000 a sell. I never even looked at the TLT here this morning. That's usually a tell. Doing nothing, down 7 cents. That's not going to be a tell. Banks do look a little bit weaker though. JP Morgan 42,000 a sell. Citigroup 23,000 a sell. So a few sellers there at some of the banks. Twitter 78,000 a buy. Twitter could be moving on Snapchat, but Snapchat is starting to leak a little bit here. You know what though? The Twitter, I saw the way Facebook bounced back. I think eventually Twitter could bounce back there too. I'm not that, still a valuation issue for me long term, but I don't know. 31.07, you put a double bottom in there. Now you get to 32.65 here. Maybe be interested in a swing trade on Twitter from the long side there. Stopping out below 31. So it's making new lows on the move. I would not want a piece of it, but somewhat interested. General Electric, 204,000 a sell. Seems like GE, no matter what, just can't catch up. But is GE even trading anymore? I mean, the last 4 days, this thing doesn't even move now. Holy cow. The range yesterday, I guess you still had a little range, a 23-cent range, but it's just sitting around 13 and doing nothing. This needs a catalyst. It needs somebody to come in and say something good or somebody say something bad just to get the thing moving again. It seems like it's dead money right now. House of Mouse, Disney, 82,000 to sell. Now back in the 114 handle. I still think there's buyers below here, especially if you get down into that 112.85 low last night. I think the lower 113s is buyers in the House of Mouse.
All right, going through my ratings calendar, there are a lot, but it is mostly just follow through from earnings. Usually on days like today, I look for initiations and see if anything crosses my eye, but not a ton to go off of. We have Guggenheim initiating Intuit at a buy, Shopify at a buy, Virtue Financial initiated from Morgan Stanley at equal weight, but nothing else really to speak of. Wedbush initiated Dillard's to outperform. They report earnings, I think, next week. So that's a call being made before the report there. But most of the ratings, like you said, just follow through from earnings. All right, 8:58. Do you have any final words of wisdom for us today, Dennis?
It's a tricky day. I mean, here's the day we're starting to leak a little bit here in the S&Ps, but again, the buy the dip mentality of this market, I think, is probably going to eventually hit all-time highs, if not today, in the next couple of days. It looks like it wants to do it. So unless we get some major headlines, some trade or something to spook the market here, it looks like, it probably is going to hit all-time highs. So I'm probably a buyer pullbacks here. I think it's hard not to be. Certain stories are not working here, but certain stories are. Big Pharma continues to, work, although it's starting to get a little extended there now. And then obviously watch some of these earnings plays there. And where's Course? Let's go look here because I was saying it might continue to leak a little bit. Still hanging out. So, and then Disney, watch that one too. I still think there's buyers below.
And Tesla, the only analyst I've seen say anything this morning
leaking big time
is Jeffries, who has maintained their hold and raised their price target to 360. So still a significant discount.
It's hard. It's hard to be a buyer here now. Tesla, I think, is a reason it's down $11 here. We don't know what the truth is. We don't know what's going on. We don't know if it is true and 420 is your cap. It doesn't look as good as a bullish scenario anymore. So I think you find sellers all up in the upper 370s. So I'm actually, no position for me. I don't know if I'll trade here or not, but I lean more to the short side in the 370s, upper 370s.
Yeah, this is a scary one. Just use those stops is what I'll say. If you're
you got to stop out on everything for sure. And, every single trade you put on, guys, we learned everything on this show. Have yourself an out before you enter the trade. Know where your out is. Think about rounders. Always want outs. That's what. Yeah, you want outs in the market as well. So if you're putting on a trade, don't think about how much money you can make. Think about how much money you can lose. Have yourself an out. Have yourself a contingency plan if you're wrong, because you're never going to be right 100% of the time. Even if you're right, 20%, or even if you're right, 50% of the time or less, you can still make money as long as you're, very consistent with those stops. So don't let yourself, don't let losers get out of hand, become long-term investments, because that's how you end up blowing out accounts.
Works 60% of the time, every time. All right, that's gonna be it for us, our show today. Thanks to everyone who joined us in our chats on YouTube and premarket.benzinga.com. Just want to remind you folks that all of the information, everything we say on our show is for informational purposes only and not meant to be investing advice. If you want to catch our podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just go to YouTube and rewatch the show there and see our pretty faces and our charts. That's going to be it for us. So have a good rest of your morning and hope you guys join us again on Thursday.